2022 COVID mortgage relief program. First, it was the eviction moratorium, then forbearance. 2022, the state is offering a program for mortgage relief. Let's get into it.
No need to worry. No need to worry. No need to worry. No need to worry.
California COVID mortgage relief program. First, it was the eviction moratorium, the forbearance program, the federal COVID-19 relief dollars, have already helped more than roughly 141,000 California renters pay their debt they incurred to their landlords during the pandemic. Now, I'm involved in 3 landlord boards and 4 HOAs, and a lot of landlords got screwed. They didn't get paid, and there was a fund set aside, and the monies weren't released. So now the state is offering similar relief to qualified homeowners who've fallen behind on their mortgages. The California, mortgage relief program will pay up to $80,000. Ladies and gentlemen, will pay up to $80,000 worth of mortgage property tax, insurance bills for qualified applicants. And I think it's important to talk about this. We're focused on the luxury segment and real estate, but to know what's going on with the state programs in California, I think it's important for lower income earners. And this is an interesting program. I just want to top line it. So the COVID-19 has left many California homeowners struggling to cover their mortgage costs, said the president of the California Housing Finance Agency's Homeowner Relief Corp. So she stated this program is designed to help low to moderate income Californians who have lost their jobs or experienced financial hardships right now due to the COVID-19 pandemic, and they've fallen behind on their payments, and hopefully get caught up and get a fresh start. So forbearance just ended. Now the state's coming in with their program. So some particulars of the program. The program is funded by a $1 billion grant from the federal government, which allocated $10 billion for mortgage assistance. $10 billion for mortgage assistance in March as part of the America Rescue Plan. I talked about this program a while back, the America Rescue Plan. So the Treasury Department, bottom line is they divvied up the money according to each state's population of unemployed workers and borrowers with delinquent mortgages. So, there are some particulars to it, how it's broken down. To qualify, a household must earn no more than the median income in its area. So, for example, in Los Angeles, median income $118,200 for a family of 4 in Los Angeles County, and the home at risk of foreclosure must be the household's primary residence. So here's some details on who's eligible and how to apply, and when will the aid will start flowing, and how long does that take. So I'll include some of the links for this. So do you qualify? How do you qualify? The program is designed to aid only homeowners who are already well behind on their mortgages on account of the pandemic, and who aren't in the process of working out a plan with their lender to defer some debt to avoid foreclosure. So you need to be behind, and if you're not behind, you're not going to qualify. According to the state's program's website, you qualify for aid if you and the California property in question meet these following conditions. I'll top line some of these conditions and review it. So, number 1, you own and occupy only one property, and it's your primary residence. Number 2, your residence is a single family house and or condominium or non-mobile. Can't be manufactured home, has to be a non-mobile manufactured home in the state of California. You experience a COVID-related financial hardship after January 21st, 2020. You have at least 2 past due mortgage payments, has to be at last 2 past due mortgage payments as of December 27th, 2021. Your household earns no more than the area median income in your county, which you can look up on the program's website. I'll include specifics in the description. And you must also have a limited amount of cash and other assets that can be easily converted to cash. So they hadn't specified what that amount is from my research, so you got to have some cash on hand. The first mortgage you took out on your home was a conforming loan, which meant it was small enough for Fannie Mae and Freddie Mac to purchase it from your lender. So the limit rises annually, and last year in Los Angeles County, it was roughly $822,375. So at least one of these 3 things is true for you. So one of these 3, you receive all of your or a significant portion of your income from welfare, food stamps, and other forms of public assistance. You are, severely housing burdened. A lot of your income is going for your house, your mortgage, your related costs consume more than 40%, and that's that threshold. 40% of your income, or your lender has denied an alternative workout option that would have helped you avoid foreclosure. So people who receive other forms of government assistance or loan forbearance from their lenders, you're still eligible to apply for the new program, the new state program. I would just make sure you talk to that lender and let them know of this state program. Say, hey, there's a state program. You guys don't want to help me out. I have another option here, and maybe they'll be more willing to help you out. But struggling homeowners should talk, I can't stress this enough, their mortgage servicer about other options such as, a formal loan modification, extending that mortgage, unfortunately, out to 40 years. That lowers your payments. Americans are going deeper into debt. And in some cases, those options may probably be more advantageous to the borrower than the state program. But at least you got another option. But try to work with your lender, even though the forbearance is ended, if you can get a lower payment for an X amount of months. Notably, aid will also be available for qualifying people with reverse mortgages. I have experience in this market. For seniors, usually that is they're borrowing against a fully paid off home, which has fallen behind on, let's say, property taxes or insurance premiums for homeowner insurance coverage which is mandated by the lender. So I've seen it really help people out tremendously. Other people have gotten screwed. You really got to look at the fine print of reverse mortgage. I can't stress that enough. One other major caveat, because the money goes directly to the company servicing your loan, you won't be able to obtain aid if that company isn't participating in the program. As of late December, state officials said that 43 servicer handling an estimated 83% of the eligible loans in the state were participating, and an additional 13 servicers handling 3% of those loans were entering the program. So, the state has reached out the remaining servicers to try to get them to sign up as well. So we'll see how that goes. They're trying to, it seems like they've gotten ahead of the game and they're just scaling it. So the chief executive of the California Mortgage Bankers Association said it makes more financial sense these days for lenders to take the state aid than to foreclose. They said that in 2008, and the banks double dipped and took $36 billion. So I'm a little concerned about that. Now we'll have to see how this shakes out. The mortgage bankers want to take every step necessary available to them, she thinks, to keep homeowners in their home this time around. We'll have to see about that. So what are some of the financial hardships that count? What sort of financial hardships, count where maybe you would qualify for this program? Unfortunately, the definition is really broad. Covering anything from pandemic related that, reduced your household's income and increased your living expenses, including temporary changes. So, it's broad, it can be ambiguous, but you might have more options. So it's kind of a double-edged sword there. So examples of income reductions, including being laid off or having your hours cut when your employer was required to close its store or limit in-person services during the pandemic, which is still going on, So examples of higher living expenses include COVID-related medical bills, higher food costs because you have taken in relatives who, for example, lost their jobs. So there are some broad things there you have to work with. You don't have to back this up with any specific proof or paperwork, but we all remember the PPP stuff across the country, people buying homes and Ferraris, and now they're getting caught. But instead, you simply have to attest that you suffered a hardship because of COVID and describe it. And that's the key. You're going to have to describe it and write it out. But I'll tell you, be forewarned, false statements can result in you being prosecuted for perjury, and that is happening across the country right now. So how do you apply? You have to do it online, which is good thing. And I'll include some links for you. If you don't have access to the internet or a computer, you can ask, the housing counselor to assist you for help in finding a counselor. I got some links. I'll include that as well. That's through, the Federal Department of Housing and Urban Development. They got like some 800 number. I'll include that there as well. But, everyone's got a computer these days or access to it. So, you may also get help from, like I said, your company servicing your mortgage. Tell them what your hardship is. Let them know. See if they'll work something out with you. Tell them about the state program. They might not be aware of it, and that might raise their eyebrows and say, oh, let's try to help them out because they're going to get the state. So the online application process starts with questions to determine your eligibility. If you meet the state's criteria, you can then complete an application for the funds and see if you can get access to it. So here's some things you'll need. The paperwork to establish typical, like you're just getting a loan, how much you earn and how much you own on the property. And when delving into the website, according to the program's website, among the documents you'll need to provide are typical of getting a loan: a mortgage statement, a bank statement, utility bills, and records that show the income earned by every adult in your household, such as pay stubs, tax returns, or a statement of unemployment benefits. So applicants who are not, reliant, and this is key, applicants that are not relying on public assistance or paying more than 40% of their household income to their lenders will also be asked for proof. You'll be asked for proof that their lender refused to defer debt or modify their loan to help them avoid going into foreclosure. So you really have to read the fine print and the provisions off the website to make sure you qualify and you get the descriptions correct and you get all the documents in. This, the site provides links to the application in multiple languages: English, Spanish, Chinese, Korean, Vietnamese. So if you have all of your information and documents gathered, you could fill out the application on the computer or even your smartphone, and you can take pictures and upload everything in under 30 minutes. So it's pretty easy. The fact is, with this all in 2008, remember, they lost everyone's information. You had to resubmit documentation, but that was done purposely. So hopefully that won't happen this time around. That's what worries me. So, all you got to do is just take a photo and upload all the stuff on the application. And when you send it in, hopefully it will be robust and someone will get back to you and let you know what you're missing. So bottom line is, when will your mortgage debt be paid? That's the key question everyone's asking. How long is it going to take once I fill everything out? Given that the federal government right now lifted the moratorium on foreclosures of government-backed mortgages, so they lifted on government-backed mortgages, they lifted that moratorium end of July. According to the state attorney general's office, homeowners are still entitled to ask their lenders for a debt deferral, a deal that could keep them out of foreclosure for at least a few more months. But if your lender won't grant your forbearance, you'll need help in a hurry. So talk to your lender, see if they'll work with you and extend it. Let them know the state program, and they may have in their system that, oh, we're not part of it, or we are part of it. But try to talk to your lender first before going the state route, in my opinion. Officials said they're hoping to get the aid flowing quickly. the state has been running, this is the good thing. From the research I read, they've been running the pilot version of the program since I think late August. And so it's not breaking new ground here. They're just, scaling the program up. A key factor in how you qualify your application can be processed is whether you provide all the necessary documents, and hopefully it's a robust system where if you miss some documents, they'll get back to you right away. So we'll have to see about that, but try to read through everything and write out the descriptions. I talked to someone over there because I have a friend that works there, and it's going to be pretty involved as far as just getting that application right. And if you are denied, you can reapply. If your circumstances change, you can also appeal. I'll include that in the description, and try to get your case reversed. So once your application has been granted, though, you won't be eligible. Stress this: once it's been granted, you won't be eligible for any further aid from the program. That's it, one and done. So when will the program end? Just like the SBA loans, and all of a sudden they ended. Right now, there's no set date. What's it going to mean? How quickly are they going to go through the cash? And they'll try to continue to help homeowners who became delinquent in 2000 and 2021. The bottom line is, until they spent the $1 billion from the federal government, a process that's expected to take, they think, 3 years. So the state estimates that the money will be enough to help 20 to 40,000 people. So that makes me think they're going to take their time and see if you qualify. So it might not just be a robust, quick turnaround process. They're really going to be looking at your application. So make sure you fill it out correctly. The money be awarded on a first come, first served basis with one important exemption. I can't stress this enough. That's why I brought it up a bunch of times. 40% of the aid must go to socially disadvantaged homeowners, and you must meet that threshold. So those are residents of neighborhoods that are going to get priority, that are most at risk of foreclosure based on their metrics, based on the owner's vulnerability index, and that was developed by UCLA's Center of Neighborhood Knowledge. So there's going to be a lot of things where you have to qualify, and they're still working that out and scaling it up. But like I said, we had the forbearance, we had the eviction moratorium because people didn't have money in their bank accounts, and they didn't have money. That's not a robust economy. They needed help from the government. If the economy was doing so well during the pandemic, the stock market, what have you, people wouldn't need help. And if the government didn't help, we would have a foreclosure crisis worse than 2008. So a lot of people that predicted saying, hey, we're going to have a foreclosure problem based on what's going on and what we're seeing in the data was true, but the government came in and helped out. So a lot of those people, some doom and gloom, I don't think you can give them full blame. But the government came in and helped out here. And here we are now with the state offering mortgage help. Now, I believe in a balance. You don't want to have a catastrophe like 2008 and subprime, because that will affect real estate even at the higher level, and things kind of work together. So you need to have a balance. I'm an investor, so foreclosures come on the market. I can pounce on some of that, but do we want a massive flooding of foreclosures? No, we don't. That's not healthy for the market. Like I said, Gavin Newsom passed this foreclosure law on auctions, and the state gets first dibs on the foreclosure. Ooh, are they going to give that to their institutional investors, their crony capitalism? Crony capitalism is what ruins America, not capitalism. Capitalism is good for America. And are they going to give it to their friends? And what's going to happen with that? So on the surface, it looks good from reading the documentation, but reading between the lines, there's some concerns there. So like I said, we need to have a balance. The defaults are up throughout the country, so there are some concerns there, and I think this relief is good to help people out. We'll just have to see if this money, this $1 billion, is appropriated correctly and it gets into the right hands of the people that really need it, because we all know in 2008 that did not happen, and $36 billion was taken and people double dipped. And it hurts everyone across the board, not just the little people. There's ramifications of that across the board. So that's a new program offered by the state. I think it's important to talk about it and know these things as moving forward in 2022 here. Have a great weekend.